This region around the Great Lakes has been called the heartland. When it comes to agriculture, there's hardly an area in the world that compares.
Everybody, just hold on. I don't know what we're going to have here.
There's a lot of self-proclaimed geniuses out there that know the national yield, but they're all wrong.
Manage money, piling in.
Double digits higher.
At this point, we're in kind of uncharted territory.
There's a lot of money on the sidelines.
So that was a crazy one.
That's what brings the viewers back. That a boy.
Good morning, everybody. It's Tuesday, September 30th, and this is the AgYield War Room. I'm Dan Dempsey, and I'll be moderating today's session. As always, if you got any questions or comments, please feel free to drop us a line in the chat area. I'll be sure to get to it during the show. Overnight markets here, December corn down 2 1/4 at 4.19 1/4. November soybeans are down 3 1/2 at 10.07, and December Chicago wheat was down 2 at 5.17 1/2. No export sales announcements here this morning. Yesterday afternoon, we got crop progress. Corn conditions came back 66% in the good to excellent category. That was unchanged from the previous week and still above the 5-year average of 58%. We're now 18% harvested nationally versus 11% from the previous week, and pretty much in line with the average. 19% is the 5-year average there. On the soybean side, saw an uptick in the good to excellent category, 62% good to excellent. That was versus 61% last week, and still above the 5-year average of 58%. 19% of the soybean harvest is complete. That's up from 9% last week, and also pretty much in line with the average. 20% is the 5-year average. And winter wheat, 34% planted. That's versus 20% last week, but trailing a little bit on the 5-year average of 36%. Good morning, guys. We've got quarterly stocks report at 11 o'clock. I think that's going to be the main focal point here today. We'll certainly, we're going to have our thoughts at 11:15 as well in a bonus War Room edition, so that'll be nice. I guess, Dustin, maybe share with us a few thoughts, what you're going to be looking at within this report, and then we'll throw it around the room.
Yeah, Dan, thanks. I think we talked about it a lot here in the letter and upcoming, all the war rooms we've had up to this point. The way the corn performed is not indicative of what the stocks are projected to be, in my opinion. Like, this is the corn stocks to use ratio going right up through this September 1st ending carryout number. So we're talking about like an 8%, just above an 8% stocks to use projection. And that would be about as low as we were in 2020 or 2021. 2020, we were at like, $1.20 over July to Sep. That's what an 8% stocks to use usually trades, huge inversions. We were at 6 over going off July to Sep. So, I still think that there's some risk here, and the market obviously thinks that too, that there might be more stocks, that were just miscounted, or just, we haven't had a good number for a while. The other thing to think about that too is, why would you think that that's possible? The USDA counts these numbers. They just had a acreage stock or acreage count on the June 30th report, and then the August FSA number comes out 2 million difference, and then we find another million after that. So that's the difference between a recorded number through the FSA offices and a survey that's published off the USDA survey number. Who's to say that the survey is going to be that accurate for on-farm stocks, something even more difficult to calculate? So listening to the market, there was no basis problems, and there were wide spreads as we finished out the year. And I think that's the risk for this report today, is that, we really could find more, or even if they did find more, will they even publish it, right? They just absorb that into the next year's production. So we'll see, but I just don't think the market is traded like we're at a 1.3 carry out for corn, my personal opinion. The other thing I did want to, before I switch too much gears here, but the other thing that I think that is just something important to remember about corn risk going forward is that, as you test different yields, I think everyone's gotten kind of friendly because the Iowa numbers should be coming down. I've heard a lot of growers say 20 to 30 bushels less than last year. Last year was a record at 211. And, the USDA's got Iowa forecasts at 219. So, of course, a lot of, I think, excitement about the prospects of lower yields has gotten into the market. But even if we take that number out, I know we've talked about this a lot, but just to quantify it, you take Iowa all the way down to 197. You take Illinois down to the 5-year average of 206, and you leave the rest of the states mostly unchanged. And you look how far off of record many of these states are too. Like Kansas, for example, still well off its record projected, and we're still at a 16.4 billion bushel production number, which is about 1 billion bushels above the previous all-time record in 2023, in a year that we probably need more cash flow. So I do worry about the next, 30 to 60 days as we go and wrap up harvest of what we're going to do with all these bushels if this is really the number. It's just we're going to run into a storage problem, I would think. So just some personal opinion before we go into the report.
And we're going to start getting our average harvest price tomorrow, every day through October, which will, obviously your coverage goes down, exponentially as we go through the month. So another thing to consider, Dustin, also today being the last day to elect this MP MCO election. I know we've done a lot of analysis, been meeting with our clients, so there's still time, folks, to reach out. And I know you've talked about it a number of times, but that's going to wrap up here today.
Yep, it's going to wrap up today. So it's I've heard a lot of pushback from different agents on it, and I think anyone that wants to talk more detail, just call us. But I think it's the especially for things like beans, the difference between this and ECO, that's your main give up, right? Is your inability to buy ECO. Otherwise, they're both subsidized at 80%. And when you think about, you've already started breaking the price a little bit, and I would say the relations with the U.S. and China have gotten worse in the last couple of weeks. We're talking about promising a payment, which to me, it sounds like they're saying that because they don't really have high hopes that a deal is going to get done in the short term. They're starting to give guidance like, hey, prepare yourselves. There's going to be other MFP type payments coming. We've heard that from both Brooke Rawlings and from Trump. And is that because the guidance is that we're just nowhere close to what we need to have from China on the deal? And this is just one more way to just sign and drive on risk. So give us a call if you want to talk about it.
Perfect. Justin, what's on your mind this morning as we head into the report?
Yeah, I mean, obviously, we're kind of sagging here, kind of towards the low end of the range for the last 2 weeks in corn. I think waiting to get through this stocks number, all the things that Dustin said, I agree with. I think if you would have looked at these prices and you would have put down the acres number that we currently are using and a 180 plus yield, I think the market would have been super bearish. I think coming from a 189, such a high number, and saying it's going to be less than that, I think that's been traded for sure. Now obviously if it's way less, we can still continue to trade that and go higher and try to make sure we get next acres for next year, all those kinds of things. I think it's just going to be an uphill battle. Maybe inflation, some of these commodities, currencies, all these other things we've talked about, are making all-time highs. So, could there be, just an inflation type play in grains? I think that's certainly possible and maybe even probable, but I think it's really more friendly the further you go out. So we talk about, spreads and all those things. I think, starting the 2026 year below break even again for a lot of producers, I think that's probably the area that you want the upside, in my opinion, if you will. Once you have a known supply and it's, factoring in storage and interest and all those things, it's like, where do you want to use your dollars the most efficiently? So I kind of try to look at it that way and say, okay, like, is it worth storing? How much money do you want to spend? You're looking at now crop insurance goes on off October, most growers are going to have 2 years uncovered risk, right? So it's like, where do you want to, how many eggs do you want to put in a basket? Part of the reason that, Dustin's been, talking about some of these insurance policies early is a cheap way, very subsidized way to get a lot of coverage that you don't have to pay for a long time, and just to take some chips off the table, or at least balance risk a little bit. So I think there's a lot of miscommunication between, call it, the average agent out there and why they're saying no, and just saying, well, ECO could be better. Like, yeah, but that's 6 months from now, right? So I think it's really important to look at, like, I mean, we're already getting contacted by bankers talking about risk for 26 and, how bad is it going to be? So I think it's just really important to balance all of that into your, your mental equation on the kind of risk profile you want to have as we go through crop insurance discovery here in October. So I think it's more of that than saying what's the final yield in Iowa? I think just realizing that it's not a no-brainer just to say crop prices are going higher from here. So I'm kind of on the same, just cautious, just being very cautious and just being calculated in how you want to, manage that risk. It doesn't say to go sell it all off the combine and just be done with it. I don't think that's the right solution. But there's certainly a lot of ways out there to get pretty good protection and kind of wait and see how this thing plays out. So.
And to that point, we've talked about it a number of times, Justin, but like a bigger break, we get into better payment scenarios. It's if a small rally, I mean, it doesn't really do much even from here. I mean, when you're looking at cost of production and things of that nature.
Yeah, right. I mean, if we stay, let's call it here, lower, I don't know. I think one of the fears would be to get a big stocks report today. The market's really close to kind of turning down again, and maybe it, catches here and, gets a bunch of new buying, but turns lower and you go, let's call it, 15, 20 cents lower than here through the month of October. And then crop insurance is expiring. I don't think a lot of growers are going to want to sell it at that time.
No.
Which is maybe the worst case scenario, because they're like, oh, it's too cheap, I'm just going to store it and hope for the best, which obviously could work. We could obviously have a nice rally into the spring, all those kinds of things, but I think you should really be playing those scenarios out. Like, okay, what am I going to do after crop insurance expires? Am I just going to let it ride? Right. And when I say let it ride, you're letting, 2 crop years ride. I do think a lot of growers are going to want to put it in as much as they can possibly in the bin. Because, basis is wide, all these things that indicate that you do have a big supply, basis is wide, carries wide. And we've built a lot of storage. I think part of Dustin's point about on-farm storage is so much storage has been built the last decade. So to get survey results on on-farm storage is probably, the error is getting bigger and bigger just because of the math of how much storage we do have now, and not including bagging systems. I mean, people are talking about emptying out flat storage. There's definitely an anger element here to the price. And so I think as much that can be put away will, but it's also probably not super bullish if you have record amount of bushels unpriced, right? In the short run, it can be. And I think that's part of what we're seeing in this rally. The short run, you certainly can be, right? Because the end users have to bid up, have to get coverage. We've had good demand, right? So we've had reasons to rally for sure, and that could continue. But at least on our farm, I mean, we're trying to be really diligent on, we do have really good yields. We've had a nice rally into harvest. We do have storage. So we're trying to, knock off big chunks of risks out forward for sure.
Very good. Got a couple minutes here, Ryland. Softer start to the week for cattle. Hogs, it was interesting yesterday to see them pop and kind of have a little bit of follow through from last week, but it was certainly a softer finish. So I guess maybe share a few thoughts here this morning.
Yeah, absolutely. Just a little bit of a weaker finish. I mean, I think at this point, there's not a lot of optimism, I think, for cash going into this week. We're still seeing beef prices, wholesale beef prices, just continue to drop here. Choice at 370.68. It's down 75, and select at 348.89, down 355. So it's still going, so I think there's just, you've got that tone in the market here right now. Obviously, the futures are hanging pretty tough at the 40-day moving average. So I think that's going to be a really significant significant area again. It's been a very big area of support, and we'll see if this seasonal break starts to dissipate at all, if we can see the cash market kind of stabilize here. But yeah, on the hog side yesterday, yeah, we popped early. It's still kind of an inside trade. Looked like open interest was still up here, but overall, it just seems like the focus right now is on cash. We're kind of got past the hog and pig report. We're past the cold storage report, which are all deemed as relatively friendly, but we're on this massive rally. We're right near contract highs. So I think the focus being on a little bit of a weaker cash tone to start here with cash being quoted at 102.44. It's down 74, and then almost a $7 decline in bellies yesterday as well. So I think you got a little bit of sourness here, but overall, I think the supply narrative is still relatively friendly just between now and the end of the year, even though we're kind of fighting some of the seasonal trends of lower pork, lower cutout, and lower cash. So we're fighting all those right now. We'll see if we can keep support here in the market for the time being, just with just the general sense that supplies are going to stay really tight.
Very good. Appreciate the update there. Just coming into the open here, we got December corn down 2 1/4 now at 4.19 1/4. November soybeans are down 4 at 10.06 1/2, and December Chicago wheat is off 3 cents at 5.16 1/2. Again, the quarterly stocks report will be out at 11 o'clock Central. We'll take a look at those numbers. We'll be back with you here at 11:15 for a bonus War Room edition. We'll talk about the numbers and some of our thoughts there as we've had time to digest the report. So be sure to tune in. We appreciate everybody that does tune in on a daily basis and supports the show. If you wouldn't mind, throw us a like and certainly subscribe. Doesn't cost you anything to do so. It'll keep you up to speed on everything that's going on with AgYield. So again, thanks to everybody that supports the show. We're doing this live every day that the markets are open on X, Facebook Live, and YouTube Live, 8:15 Central Time. Again, we'll be back at 11:15. So until then, thanks so much for tuning in, and we'll see you here in a little bit.
The War Room is proudly presented by AgYield. For over 50 years, the AgYield team has provided grain marketing and risk management solutions for growers across the country. Our veteran consultants harness cutting-edge technologies to pinpoint risk, optimize market performance, and protect your farm's profitability. Discover a new approach to farm revenue management at agyield.com.
Hey guys, Jack here. Be sure to support the show by hitting the like button, leaving us a comment, and subscribing to the channel for all the latest updates. Thanks for watching. We'll see you next time.